How much should you pay for this stock? This guy loves CLX stock, Clorox. He's okay overpaying for it. He clearly doesn't time the markets. I don't know how he values companies though. I don't know his process, or is really just after the dividends. If you're like him, you love CLX stock, let me just show you what you're paying for in the stock if you agreed to buying the stock at these prices, 140.98. This is CLX stock's valuation summary at the current price of 140.98. This is what you're agreeing to paying if you buy CLX stock at these prices. You're agreeing to pay 10.36 times EPS, 3.36 times their margins, a PE of 38.23, a price of free cash flow of 30.82, my allowable is only 20, and a PB ratio of 30.12. My allowable is only 5. This is just overvalued, guys. My fair value of the stock is $42.02. This is what we'll get if we multiply the current EPS during 12 months of 3.69 and the lowest margin of 11.39. Again, I pay $1 or 1 PE for 1% of their margins, and their margins play around 10 to 12%. Guru Focus's intrinsic value is 66.61. I don't own the stock. I don't think you should pay premium for the stock because of this single-digit revenue growth. I have a sell rating on this stock. You don't have to short, just leave it be. Here are my entry PEs and prices, 8, 9, 10. This is based on the 30% margin of safety from their highest margin of 12.4. I have a high price of 36.9. The stock is now 41.23% of the highs. If this attracts you because, it's down 40% of the highs, even after seeing the multiples it's trading at, I think you should rethink your process. CLX is paying $4.64 annual dividend per share. They bought back 6 million shares in 5 years. Good. Again, their margins play around 10 to 12%. Price to free cash flow is just too high at 30.82. Dividend payout ratio is so high, 125.75%. Let's look at their shares if they diluted. Well, thankfully, they did not dilute shares. Let's look at their cash or debt. They burn cash to pay these dividends while paying some of their debts. So, historical PE, expensive. Historical price of free cash flow, expensive. And historical PBs, expensive. Actually, cheaper, but only because it was at 40s of PB. I wouldn't call it cheap, exactly. I don't understand the buyers of this stock. I don't wish to understand them. They might be buyers of this stock way before the pandemic lows, and you should just, leave the stock to them. Refuse to be bag holder of this stock. It might be a monopoly, duopoly, they dominate the area, the space, whatever, but there's a price for everything in the stock market, and CLX stock at $140 is not something you should be buying. Anyway, let's look at their charts and confirm our entry prices. This is CLX stock, Clorox company. On the monthly, it went crazy when it broke 66 in 2011. Not a pullback since then. $116 is 4% dividend yield. 5%, 6, 7, 8, 9, 10, even 11% dividend yield at $42.18. My fair value is $42.02. Clearly, no one is selling, hence the parabolic rise of this stock. I'd only recommend buying CLX at $42, given, their data, trailing 12 months. I mean, their fundamentals could get better and these prices could improve. But for now, CLX is not worth $140, so don't pay $140 for it. $42 for CLX stock for long-term hold. Enjoy your 11% dividend yield. I don't think we'll reach those lows though, so put this on your avoid list instead. That's my take on CLX stock. See you next video.